Good evening. We're going to start a little bit earlier today, so it's Sunday about 8 o'clock Eastern time. We got a special morning briefing, so we'll start very quickly to cover some areas, so then we can explain why we need to do this other part about before the opening tomorrow in the market. So with that, we're going to proceed and start the morning briefing for Monday morning. Okay, here we are. Morning markets already for Monday morning, already open in Sydney, Australia, probably. So we already trading way back on the other side of the world. Down futures show like a 13. S&P 5 S&P 500 futures is showing up $1.50 down, and GameStop from Friday it does lost $1.47. It's a stock that been a lot on the news, but it don't right now gaming with some of the game being canceled, so it's going to be difficult. Advanced Micro Device that is in talk to buy another company. They seem like it's not being received too well, so Friday afternoon it closed at 340 minus 341. Now the Dow future has jumped to 43 minus 43, and then finally we're going to look at Interactive Brokers. Look like they're going to do very good, but Friday was not much of it. But this guy probably going to do very well in the next few months. So with that, we're going to move right quick to DraftKings. As you all can see, is on the way down. This is due that a lot of the games have been canceled. A lot of the football games, sports games with betting take place, so that hitting a little bit. Plus, it kind of moved way up. There's a special video coming in with the bell curve proportional distribution to show you how we can assess this price and expect just about how far down it's going to go. This is one of the reasons that we're doing this video a little bit earlier for in the morning, so we had time to prepare the other one. So GameStop GameStop had the same. GameStop it had the same. Have a big spike from 9, but it didn't hold the following day. It didn't make it heavy volume, so that means that it probably go down tomorrow. Golden Metric is flat at $6. We expect it to go to close to 750. So far so good. It's doing very well. So we'll see how that go. Gold is not doing anything. We're losing inflation. The CIA company, as we call it, that just recently went public, 17 years of losses. They probably be doing more contract for the government, but it has to do probably with security issues and so on. So we'll see how that goes. So with that, we're going to move to the chart that we need to explore today. So this is a trade that we're expecting to do tomorrow, and this is S&P 500. What we're using, there's two ways to do the S&P 500. This is an index, so you can buy options on the index with the calls or put, and that works out very well. Or you can buy the ETF that is perform the same but at 10% value. So right now the S&P 500 index is about 35,000, and so then you will see like a 35, you will see 350 on the ETF. On the ETF, you can buy shares. So we'll be talking over here about shares, but also you can buy and sell options on the Spider ETF. So with that, this is a special trade. We're going to demonstrate here. I'm going to demonstrate here. So let's look at the price here and see that normally it moves up on this direction. Finally, it got about three something. It came down. We're blowing up this picture for the simple reason that we got something else that we had to bring in here and move it so you can see how this particular tool can be used. It's called the proportional distribution. That can be used for gambling. It can be used for weather. It can be used just about for anything, as you already know. We have shown a small video on that. And this time we're going to put the application into the stock. So you can actually pick the price and location and kind of determine just about where the price is going to be. So let's see how this trade going to work out. Number one, on this trade, we're going to move a little bit over here with on the closing what coming in, but we noticed that the S&P had dropped and it coming down on this area here, so it get down about to 3. Let me move the price here a little bit more so we can see where we are. Okay, so we get right here and get it into scroll in a position that we'll be able to do the rest of it. All right, so here we are just about where we need to be. We're going to move the out of the way, put the stuff here out of the way, and here where we are now. So we know that the lows here, it was right about near 325. So this is interesting because what we're planning to do, there's two type of trade that you can do on this for Monday morning. So depending how the price go, but if you're a gapper, you know, this is a big gap. We got a gap here that it got about $5 gap, you know, so, and then we have right in here the position where whether we can where we can determine just about what is going to be our baseline in here. Someplace in here we're going to have a baseline, so it make it easy for you to see. This is what that's where we're going to take the measurement from, but the gap is still is a big gap in there. And this is, as soon as you see this gap moving in here, where the gap is, you can assume that the price is going to go higher. You know, we expect the price to go higher. So you're a gapper, you look at it for confirmation, and then you move in. So as you can see, gaps are normally to do it within 3 days at the most. So if you decided to be a gapper when it closed day, you move next day here, or you buy at the end of the trading day, close to the end. You expected the same. You don't know that this coming, the gap. So it kind of forms a spinning top. So you come in and do two things. You move in here on this day and you buy in. And what we're going to do, you ride it about for 3 days. So you're going to come at this point and you're going to exit here. So be your swing play. That's what we're going to be. So this is your swing play, and that's about it. Now, if you are not a swing player, then you can wait and see how this becomes stable, and then, or you can buy the ETF because you expect it to go up. So now you're buying the stock, but remember that if you bought it right in here, you have to pay $330 a share on this ETF. If you buy an option, well, then you might have to buy it for a couple of weeks or 3 weeks to give time for this to formulate, so you will be making money just the same way that the swing guy is doing it, and you'll be out at here because that'll be 3 days for the swing player. So if you're going to do the option, you know, to buy in the ETF, so you got two options over here. You can either do a call or buy into the ETF, or the next time you see that this outcome, it has 3 gaps in a row. You're jumping here, there's 2 gaps, 1, 2, and this is an indication that this is very strong. It's going to get higher. So this is at the time coming tomorrow morning on the 12th. tomorrow morning on the 12th, you see how this go, and if it go in the right direction, you should move in. All the indication is that this is where it's heading, but we don't know if a politician opened his mouth and made bad remarks or something happened overnight. This is kind of early for the market for us, but we have to do it Sunday evening to get of the rest. So the way to calculate your risk, and this is what we're going to do here. Before you do this chart is about also calculating your risk and reward. So with that, what we're going to do to show you uh, the final trade, the risk reward, we're going to say that this is our center point here. This is the risk line, $335. Then we're going to calculate that there's a $10 price between this part here, 325, which is kind of the low end of this part. So you take 325, 330, 335, so it's $10. So you're going to risk $10 a share in case that this price, when we move in, don't go in the right direction. So you have to determine how much you're willing to lose. Now, if you buy one share, you're going to have to buy $335 for one, but the risk per share is $10. If we buy a contract from an option, which is going to be a call, then this call going to, whatever the price is, we're dealing with the possibility of losing for $10, 10 shares, 10 shares. So it'd be $10 of the $100. So you can calculate this based on how many Stamos shares. So you buy 100 shares, then we can lose $1,000, right? Or if we buy now 10 shares, so we can lose $10,000 for 10 shares. So what we're going to do here is that we're going to move in here, because this is the risk is that if it doesn't go up, we can lose $10 the money here, the $10 per share. So what we're going to do here is now that tomorrow morning when it opens, the ETF will be somewhere about 345. At this time, you either buy shares or buy the option. But how much money you expect to make out of this? So in order to take a risk of $10 a share, you should say that you expect the risk reward to be 3 times as much more than what you invested. So you invest $1,000, you're expecting that you want, in order to do the trade, that you expect to get 300%. So this is the maximum. When you reach this, you get out. However, in case that don't happen, and this is because the next part that we're going to set in here, so your midpoint be about 200, so it's 2 to 1 or whatever the share. So you want 3, they're going to be 3s that are going to give us over here 300%. So that'll be the max. If it's not, then we're going to do this part here, and they're going to take us into the 200%. But remember that you don't want to lose more than per $1,000 based on the low and the end here. So it's $10 different there. So we want to make $20 or $30 about this. Otherwise, if it's no look like this can be done, then we just don't do the trade. So always remember that. So it's a risk reward operation in here. With that, we're going to move into this end to put the other part that's going to fit the puzzle. So now what we're going to do, we're going to reduce the, the size of the picture. And we're going to come over here and let me move this a little bit out of the way, put it someplace in here. And we're going to get here and we're going to reduce a little bit no, we're not going to reduce it. We're going to stay like we are. But what we're going to do, we're going to come over here and get this part here, okay? We're going to copy it here, put it in here like this, and then we're going to say copy, and we're going to move over the other side of the picture now. So here we are. We're going to insert our picture here. And what we had to do is we had to reduce it to fit the chart. So we're going to do that. We're going to be someplace around here. And let's see how well this is going to fit. All right, so now that we have it here, notice that we can move it in any place here. And this is how we're going to establish. Remember that we're going to be on the risk line at 335. So we have to put the chart someplace in here to see the trade 335. And we're going to adjust it a little bit more to get the proper ratio into the chart. So let me make it a little bit more. So we're going to get a little bit bigger. And this is what's going to happen. When we put this right here, right in the middle of that line, this is our risk line in here. And we got to bring this part probably a little bit bigger. Let's see how it works out. Okay, there we are. So now we're in proportion with the chart. And the reason is that if this is zero line, the risk line in here, we're going to have to move it up a little bit more now to get back on the same place. We might have to get even a little bit bigger again. But what I want you to see is this, what's going to happen. We come to our center point and say, okay. So when we use the proportional distribution of the price, we can tell that before the highest of this chart had gone right about, the highest point had been 355. This is a very extreme because we are in the 16% of that. And normally the price distribution is between these lines here, okay? So this is where you want to do is, when we set there, we're going to draw a line here, and we can take a red or whatever to continue like that, and we're going to put this line here. So this is going to be just about your exit point, about 345. We're going to put this other line here because we're going to be very close to the lowest end of the chart, you know. So we're coming from 325. Notice how this line matches with that. So tomorrow morning, this is a price that is extraordinary level. This is where we're going to move in and buy that. And we expected that it will travel what it used to be. The previous high was 355, and we're going to move to 355. So we have here 345, 350, 350. So it's exactly $10, right? $10 of the risk. So we want to go this extremely higher in order for you to make the 200%. And this is the idea. So since we're using a stock, we're using share, if we double the amount of the risk, then we'll be able to get 2 times as much. So remember, because what we're trying to do is to get over here to 355. If this is continued, it's breaking out into unknown territory, but it had done that before on the other side too. So we hopefully they go back and they're going to find some resistance that we cash this money, to cash this jump on it with now that you have breakout. Normally, this is extraordinary when the price go above that, but this is the whole idea of the charts. And to put the distribution, so the 64% where the price or the 100% that the price normally move. This time we know that we're above that. It came from here to here, so here our 64%. It already have moved 32% above this line. So the swing guy came in and exit here. He might do another swing from here to here, but we're coming into the picture now this time. And we're deciding that because the big gap here, and now it's been reinforced, this gap, by two more gaps in a couple of days. So this is the understanding of the chart, and this is what we expect for tomorrow morning that going our way. So with this, uh, that end the morning briefing, and this morning briefing this morning also include the way that to make a trade. So later on, there's going to be another video with the same information you're getting here, but it won't have the stock briefing. So I want to thank you all this morning for taking your time and watching my morning briefing, and hopefully that this week be as profitable as it was last week for most of us. So hang on in there and let's keep an eye open for the market, because we're coming very soon to election and a lot of people do crazy things nowadays. So hopefully everything go well. Stay away from airlines and oil and energy for now, and we see how DraftKings continue on the gambling business before we move back in. So have a good morning and have a good week coming up week with your profit. So thank you very much. And as usual, remember that we don't trade or we don't sell anything. We trade for our own. I'm a trader. I'm a trader just like you all are, and I just share the information with you all and my friends. So thank you very much. Take care. Have a good day. Happy Monday morning.